We've got many guests that are lined up for you on the show, and let's get in a couple of them. We have Mr. Prashant Khemka, founder of White Oak Capital Management, who joins us on the show right now. Hi, Mr. Khemka. Good afternoon, and always good speaking to you, sir. It's that sort of a day when the market wants to hear you. You know, markets are a little bit nervous. We have the broader markets under pressure. The headline index as well as not getting much support. What are you making of this entire sell-off that we're seeing?
Good afternoon, Nigel. Thanks for having me here on the show. I think if you look at over the last 12 to 24 months, or even I would say somewhat longer post-COVID, it's been somewhat of a one-way street. And equity markets, as we all know, don't just return month after month, quarter after quarter, year after year, positive returns necessarily. So there was this some overconfidence setting in amongst investors, particularly as it relates to small cap names. Small caps, despite the 10-11% downtick that we've seen over the last few weeks since the high that was reached earlier this year, it's still up 60+% from March of last year. Yeah, at its peak, it was up 80 or nearly about 80%. So there was a considerable amount of excess that has been built into certain segments of small caps. And so it's a timely, I think, I would say even an awaited correction. As they say, a stitch in time saves nine. Corrections like this safeguard the market from collapse later on. So I would say it's a healthy correction and not something that should be worrisome.
Okay.
Mr. Khemka, hi, good afternoon. Surabhi here. Completely understand the point that you're making. I think the question right now is just purely in terms of technicals. Do you think this is getting exacerbated because of leverage in the system? Is there a lot of leverage in the system? We know that, retail was really piled up on mid-cap and small caps. So the ferocity of the fall, the fact that we've seen this 10% knock in just 3 sessions alone, where are we now? Do you think we're somewhere close to the bottom, or is it hard to say?
As we were just saying a few minutes ago, it is not just hard or difficult to say. I would say it's impossible to say where we are. This could be an interim bottom, or there might still be a long way to go. Nobody has a clue. To your earlier question of whether it's leverage that exacerbating or other actions that the industry is taking, these are all, whenever the market falls like this, or a segment of the market, because the broader market or the larger caps are only off 3% from their all-time peak. Yeah, it's the small cap and the micro caps which are down double digits. So whenever there is some such action, there's always a desire to attribute it to something specific. It is possible that these things that they're there could have contributed to catalyzing this fall at this moment. But otherwise, it's just the sheer momentum with which it had gone up over the last 12 months itself is a good enough reason for at some point to take a pause and have corrections like this. Now, every time that it corrects, there would be some concurrent factors to blame it on. And I think that is what it is, these other factors that we talked about. If these factors were present at a time when market was not at such a excited stage, I would not say euphoric, but market has been at an excited level for some time. It was only due, I would say, regardless of any specific contributing factors.
As you said, timely and a much-awaited correction setting into the market. Prashant, afternoon, and thank you very much for joining in. Is there a lot of evidence of margin-based selling which has come into the markets right now? Because the way the prices have snowballed on the way down, have we seen retail, HNI participants, unwind their holdings in small and mid caps? What's happening in terms of the flows?
Hi, Reema. So I haven't seen that kind of a data, nor has anyone, brought to my notice that kind of a data. It is possible that on the margin, some of that would contribute as well. But There's nothing that I've seen to suggest that is what is primarily driving it. Yeah, it is a modest, it's still only a 10-11% correction. I know it's feels quite rapid because of, it's happened in the course of a week or so, but it's still only a 10-11% correction after a 80% rally in small caps.
All right, Mr. Khemka, what do you buy then? Everything went through the roof at one point of time. And if you were talking very rationally, actually, you were finding yourself isolated because the markets just kept going. 6 months ago, if you said that the small cap index is looking overvalued, everyone would say yes. But the market just continued to go up. So as of now, if you had to look at a few stocks or maybe an index, financials, I would like to hear your view on it. What is still looking like a reasonably valued sector or stock?
Certainly. Certainly, Nigel. See, not necessarily because of this fall, but even otherwise, even before this fall, there are always names that are overvalued and names are undervalued even within small cap. So even if small cap as a whole is overvalued, there would still be names that would be undervalued. And our team continues to, at all times, make those changes or adds or trims to the portfolio. Obviously, when a fall like this happens, oftentimes the good names, what were anyways attractive, they may also fall for them. They may not fall as much as some of the segments of the market where, to use a term that is now very much in vogue, segments of the market where there might be some froth that is built up, but there would be some fall. So what is good thing about this fall is in the last few days is the maximum fall is, at the risk of generalization, has taken place in areas where there was excessive froth that had built in. A lot of the sectors and market cap segments, like be it real estate, be it some infrastructure names, be it, PSUs, some of them, particularly in the small caps. These are exactly the same sectors that had a fantastic run in 2017. So in many ways, the rally of 2023 was a reminder or reminiscent of the big rally in 2017, and we hope 2018 is not, repeated. I'm not suggesting it would be, because that was excruciatingly painful for everyone, if you remember, in 2018, particularly for small caps. But a lot of the names that did fantastically well, even not just sector by sector, even stock by stock, a lot of the names had their prior peaks in 2017. And some of them have seen the biggest knockdown now in the last 1 week or so, which is, I think, healthy or even a deserving correction for many of these names.
Prashant, just want to ask you, in terms of course, you also have an asset management business. In terms of just going back and trying to understand what has exacerbated the fall, why such fierce momentum on the way down, have you been hearing about a lot of redemption requests across, whether it's PMSs, whether it is mutual funds? Just trying to understand, or is it HNI? So what's causing this spiral down? And it's been a continuous one right from the morning.
So from our AMC folks, we haven't heard any of that thing. But to give you some context, we might not be the right example. Even we actually cancelled last year, mid to late last year, or third quarter last year, we cancelled our launch of small cap fund, probably too early, thinking that the market was, small caps ahead of themselves. And our mid cap fund is an SIP only fund, so we don't take lump sum amounts. So our fund is unlikely to see, even if it is happening in the market, they're unlikely to see that kind of a action that you asked. So at least from our team, I'm not hearing that kind of thing.
Are you worried that if big redemption, the big selling volumes come in the small and the mid-cap space, the depth in the broader markets, in these scripts, may not be able to take that, and we will see a very sharp fall? So right now, the fall that we've seen, 10% from peak levels, hasn't come in on very large volumes. As you said, you've not heard of big redemptions coming through in the industry. But what if that starts? Does the market have that depth, or are we going to see some big fire sale?
Very true, Reema. That is a risk. If you have another fall in the market similar to what we've seen over the last week or two, then that does become a risk. Because what a month ago seemed like a good depth in the market, a lot of names with very large liquidity, all of a sudden in such environment, liquidity disappears. So highly liquid names, particularly small caps, micro caps, would all of a sudden become very illiquid. And at the same time, if you have selling or redemption pressure, then there is no choice but to push the sale, and that can exacerbate the matters. One thing I would point out though, in such times of liquidity crunch, the better names, the better quality companies across market cap spectrum tend to have relatively better liquidity. Their liquidity improves relative to the not so good names. Yeah, so it's not that that would necessarily save them from going down, but still they tend to outperform in such market environment. They'll be down, but down less than the small cap index, let's say.
Okay, all right, Mr. Khemka, you put it perfectly, right? It's going to separate the men from the boys now. The big boys could come out to bat, put it in cricketing parlance as well. We appreciate you joining in and giving us those views. And as you said, this appears more like a healthy correction rather than a carnage of sorts.